So we were doing cash flow statement, and now till now we have learned how to classify various activities into operating, investing, and financing. Also, we have learned that which transactions will result in outflow of cash, which transactions will result in inflow of cash, and due to which transactions there will be no flow of cash. So now coming to the main portion of this chapter, see there are two methods of calculating of preparing cash flow statement. But right now only one method is there in your syllabus, that is called indirect method. Now because your cash flow statement is divided into three parts, means we will be calculating cash flow from operating activities, then we will be calculating cash flow from investing activities, we will also be calculating cash flow from financing activities. So your cash flow statement is divided into three parts. Now we are going to start the first part. That is, we will be computing the cash flow from operating activities. Am I audible properly? Am I audible properly? Please tell. Is my sound clear? So, because the cash flow statement is divided into three parts, so we are going to start now first part, that is cash flow from operating activities. Now there are various steps in this first part also. We will learn each and everything step by step. So you can see on your screens, step 1 is mentioned there that we have to calculate net profit before tax and extraordinary items. Now first question will be, what are the extraordinary items? See, what is ordinary, you should understand that first, then you will be able to understand what is extraordinary. My ordinary activity is purchasing of an article and selling of an article. My ordinary activity is manufacturing any article and selling that article. My ordinary activity as a financial institution can be accepting the deposits and disbursing the loans. But some extraordinary things can also happen in your business, like you can have a loss by fire, you can have a loss by accident, you can get an extraordinary subsidy which you don't regularly get from the government, that can come to your business, your industry, in the government policy. So there are a lot of extraordinary things which happen usually in the business. So we will separate them from our profits. We will obviously show this also because it will also be affecting the cash flow somewhere. But these are to be disclosed separately because it is not in your normal course of business. That's why. Now, if we will focus on this portion only, that net profit before tax, we have to calculate the net profit before tax. So how we will be reaching to the net profit before tax? Because what you will get in the question, you will get a balance sheet in the question. In that balance sheet, obviously there will be 2 year data will be given to you, will be provided to you. One will be for last year and one will be for current year. So whatever surplus is given in the statement of profit and loss, closing balance means this current year balance is given, that you will take out from there and you will subtract the opening balance of statement of profit and loss which is written in the last year balance sheet. Means you have to do closing minus opening. This step sometimes confuses students. That's why I have clearly mentioned here that you have to subtract opening balance of profit and loss account from the closing balance of profit and loss account. Then you will get profit for the year. Now you can think it logically also. Suppose I am giving that my last year profit and loss balance is rupees 100. And now I am saying that my current year profit and loss balance is rupees 300, suppose 300. then the difference between the two will be the current year profit, because the profit and loss balance will automatically increase when I will be adding the current year balance to the previous year profit and loss balance. Is this point clear? How we will be getting the profit for the year? Because in most of the questions you will not get profit for the year directly from the question. So how to reach to the current year profit? That is the first step to be done. That how I will reach to the current year profit. So the difference between these two balances given in the balance sheet, current year minus previous year, current year minus previous year, you will get the profit for the year. Then you have to add something, you have to add certain figures into that. So whatever profits you have transferred to reserves to that particular year, in that particular year, that has to be added back, because reserves are undistributed profits. So if I am getting 200 here, I should write here. If I am getting 200 rupees here, so obviously this 200 is after giving the reserves, after transferring some profits to reserves. So that reserves are to be added back. Obviously you would have some certain tax liability also. For that also you might have provided certain funds as provision. You have created a provision for meeting out your tax liability in near future. So that's why whatever provision for tax you have created, that is also created out of profits. So that will also be added back. So one thing, you have to add the reserves, whatever you have transferred in the current year. Just focus on the words, what I'm saying. Whichever amount out of current year profits you have transferred to the reserves, that will be added to the profit for the year. Similarly, whatever provision you have created out of the current year profit for tax purposes, that provision for tax will also be added back. Now, if you have received any amount, if you have incurred any loss which you have debited in profit and loss account, which is of extraordinary nature, which usually not happen in your business, such expense, such loss will also be added, because what is happening, that extraordinary expense might have reduced your profit. That doesn't happen in normal circumstances. So we will add back such expense or such loss also. Then you have to add the interim dividend. Now what is interim dividend? See, companies earn profit and they usually came to know about their profit at the end of the year. But if you will see the practice these days, companies are preparing their financial statements on quarterly basis. So whatever profit they earn in a quarter, out of that they usually pay the dividend to the shareholder also. So each and every quarter results are coming, like if you are listening the news these days, and the quarter which has ended on September, 30 September, which has started from July 1 to 30 September. That results are coming these days, and companies are announcing good amount of dividend because they have earned good amount of profits in this quarter. So the dividend is usually paid after 1 year profit has been calculated. But because now practice is that we are preparing our financial statements on quarterly basis, so we are giving dividend to shareholders also in mid of the year. So whichever dividend is paid during the year, during the financial year, that is termed as interim dividend. That is termed as interim dividend. So whatever dividend you have paid during the year, that will also be added, because dividend is always paid out of profits. So we have to add the transfer to reserves, we have to add any provision created for taxation, we have to add interim dividend paid during the year, we have to add any extraordinary loss incurred during the year. Now we have to subtract certain amounts also. If we have used our reserves in any manner, we have transferred some reserves to the credit side of profit and loss account, then that amount has to be reduced because it is not a current year profit. So that amount will be reduced. Similarly, when I have created a provision for tax, I am adding it back. But suppose I have made a provision of rupees 100. I took an example here. Suppose I have made a provision of rupees 100, but my actual tax liability becomes only rupees 90. Then what will happen? The difference between my actual income tax and my provision for tax will be now rupees 10. Because I have paid government rupees 100, and government after assessing the tax liability find out that now the tax liability is only rupees 90. So obviously, so I will be getting rupees 10 back. That is called refund of income tax. When I will be getting that rupees 10 back from the government of India, that is called refund of tax. So that is also an income, a sort of income. So that will also be reduced because it is out of the provision created for the last year. Then extraordinary items credited to statement of profit and loss. Certain expenses or losses can be there. In your profit and loss debit side. Similarly, certain extraordinary incomes can also be there. Like if you are having a loss by fire, then you might have you might have received an insurance claim also. So that is also of extraordinary nature. So that has to be deducted from here. So you will find that many additions and subtractions are there only in the step 1. And this is only 1/7th part of the cash flow statement, if I should say. So there will be a lot of rules, minute rules, lot of calculations, lot of logics. So I will request that whatever topic I am discussing on a particular day, go through that step only. Try to go step by step in this chapter. Okay, now, so we have added, but if you want to remember this step, in short, if I summarize this step, we have to add 3 things. Generally, subtraction part comes less, very less it is asked. So we have to add, and the keywords are tax, reserves, and dividend. These are the keywords. These are the keywords. You can see reserves are added, tax is added, and dividend is added. So these are the very 3 keywords which you will usually find in each and every question out of these 3. So if you want to remember step 1, first thing, you have to calculate profit for the year. What is the formula? Closing minus opening. Again, I am saying, please remember the formula: closing minus opening. And in that profit, you have to add 3 things: tax, reserves, and dividend. Rest you will remember over the time when you will do practice step by step. Obviously, other things may also be asked, but usually you will find these 3 at your level, usually. So this is the first step. Now I have prepared a profit and loss account for clearing this logically to you. See, this is my net profit. And if I have paid the dividend, that will also come on the debit side of profit and loss account. If I have transferred any amount to reserves, that will also come on the debit side of profit and loss account. And if I have created any provision for taxation, that will also come on the debit side of my profit and loss account. So if this is the profit which I have added to the last year profit, that was 200. And if I will add these 3, dividend, tax, and reserves, obviously this has been already subtracted. So I will get profit before tax. I will reach to this profit. I will reach to this profit. So I will get profit before tax. Similarly, your refund of taxes or reserves which you have used in this particular year will be on the credit side. So these are to be deducted, that I have shown you diagrammatically here in the profit and loss account, so that you will be clear about these things logically also. Why we are adding, why we are subtracting, what has to be added, what has to be subtracted, that should be clear in your mind. logically. I hope these all additions and subtractions are clear to you, why we are adding and why we are subtracting. If still any point is not clear, you can tell me. If I move from the top in the profit and loss account, you can see we always write gross profit here. Then there are two types of expenses, operating expenses as well as non-operating expenses. We will discuss in detail what are operating expenses and what are non-operating expenses in the coming time. So if I add both types of incomes, operating incomes and non-operating incomes, and if I subtract operating expenses as well as non-operating expenses, both are type of your indirect expenses, you will get a net profit. This is your net profit before tax, dividend and reserve. When we were calculating return on investment, at that time also we have calculated this profit, net profit before dividend and tax. So if I have somehow subtracted these also, then I have to add these back to reach to this profit. So that's why I'm adding it.